And I'm going to go very slowly. I'll be able to speak very, very pole here so that at the end of the day, we should be able to agree. So remember a foreign subsidiary. We have the parent company, for example, being in Kenya. Like now, EABL. The parent company is here in Kenya. But they have invested in a subsidiary which is based, for example, in Tanzania, called the Serengeti Breweries. Serengeti Breweries. At the end of the day, the parent company will present its financial statements in terms of what are Kenya shillings. The subsidiary on the other side, their functional currency is what here is Tanzania shillings. So they'll be able to produce their statements in Tanzania shillings. But at the end of the day, for purposes of group consolidation, those financial statements here must be put together, must be added. So you are adding, and one, especially for the subsidiary financial statements, are represented in a different currency. What do? We have to translate. We have to translate the financial statements of the subsidiary into what here, the currency of the parent company, Now, when we are translating, what rules are we supposed to remember when translating here? Rules, basic rules. The basic rules is that assets and liabilities. Assets and liabilities, where are these found? These are found in the statement of financial position. Remember, these are rules of translation. So translation rules, translation rules. So assets and liabilities, we shall always be translating them at the closing rate. At the closing rate. Closing rate is the rate which exists at the end of the year during the financial reporting period. End of the year, closing rate. Of course, if it is incomes and what year expenses, incomes and expenses, which we shall be getting in the statement of profit loss, you know, income and expenses, they accrue almost evenly in the whole year. You'll be getting, ladies and gentlemen, like sales revenue. You have sales revenue coming to us on the 1st of January. Sales revenue coming to us on the 5th of January, on the 12th of December, etc. So over the whole year, we have what we call transactions. So always, incomes and expenses, we shall be translating them using the average rate. Using what here, somebody? Using the average rate. Using the average rate. And then, ladies and gentlemen, of course, we have acquisition. When you are acquiring, for example, a subsidiary, for example, you'll be having here like net assets at acquisition, and for example, goodwill, I would have said a comma. Net assets at acquisition, goodwill at acquisition. I want to keep on insisting on this. Goodwill at acquisition. Talk of NCI at acquisition. Anything in this case here that this examiner is using this word at acquisition. Everything here, we shall be, ladies and gentlemen, in this case here, translating them using the acquisition rate. The rate which existed on the date of the acquisition. So the acquisition rate, we'll get some books calling this the historical rate. So anything you hear like net assets at acquisition, goodwill at acquisition, NCI at acquisition, these ones, we shall always be, ladies and gentlemen, translating them using the rate that existed during the acquisition time, which is also known as what here, the historical rate. So hii ni swali ambayo hata kama uko na shida, hata kama uelewi consolidation, you utaenda kupata everything without knowing what you are doing. And I would want us to be very attentive as I do this little illustration, which I would want to share with, already I've shared with you on WhatsApp. Already I've shared this with you on WhatsApp. Great. Kidogo tu. Already you have it. Let me try to get where this guy aliweka. Stop share. Yes, here it is. Here it is. Great. So I want us to go very slowly with this, very slowly with this, very slowly with this, in a way that all of us should be able to do what here, appreciate. All of us should be able to appreciate this. All of us should be able to appreciate this. Kidogo kuna wanafunzi wanataka link hapa. Just a minute, 1 minute. 1 minute. So great. So we are given an example here. This example, the following are the summarized accounts of Nigeria and Lagos. So these are two different companies. One company called Nigeria and another one called who? Lagos. One good thing that I'm able to see is that Nigeria company has its financial statements presented to us in terms of dollars. Lagos has, in this case here, the currency DN there. DN there could be Naira, whatever. Now, listen and listen to me very well. They have given me everything there. And then we are told here additional information that Nigeria acquired 40,000 shares in Lagos on the first day of the accounting period for DN 400,000 when the retained earnings were DN 50,000 and the fair value of the NCI was DN 30,000. At the date of acquisition, the fair value of Lagos non-current assets, which at that time had a remaining useful life of 10 years, exceeded their book value by DN 10,000. The annual impairment review in respect of the goodwill arising reveals that no impairment losses have arisen. 4, since the date of acquisition, no dividends have been paid and no shares issued. We can see the exchange rates to dollars. We have start of the year, average rate is for the income statement items, and then end of the year is for the balance sheet items, assets and what here? Liabilities. So they want us to prepare a consolidated statement of financial position and a consolidated statement of profit or loss and other comprehensive income for who? For Nigeria. For Nigeria. So we start as usual. We start with the group structure. Group structure. So Nigeria acquired how many shares? 40,000 shares in Lagos. So Nigeria acquired 40,000 shares. So we have here Nigeria acquired 40,000 shares of a company called 𝐵𝐵𝐺𝐻. So Nigeria acquired 40,000 shares. So Nigeria, a company called Nigeria acquired 40,000 shares of a small company called who? Called 𝐵𝐵𝐺𝐻. I'm interested in knowing the percentage of this investment. So we bought 40,000 shares of 𝐵𝐵𝐺𝐻. So how many shares does 𝐵𝐵𝐺𝐻 have in full? Please go to the balance sheet of 𝐵𝐵𝐺𝐻, go to the balance sheet of 𝐵𝐵𝐺𝐻, go to the statement position of 𝐵𝐵𝐺𝐻, and be able to read the number of shares that 𝐵𝐵𝐺𝐻 has in full. So 𝐵𝐵𝐺𝐻 has got how many shares, in total? How many shares in total? Look at it, at this. It's ordinary shares, $1, DN1 shares, meaning that the par value is 1 across the board. The par value is 1. So remember to get those, which is number of ordinary shares. We normally take the share capital. Like now you can see the share capital of 𝐵𝐵𝐺𝐻 is 50,000. You divide by the par value. Anytime you want to get number of ordinary shares, my good students, listen. Anytime you want to get number of ordinary shares, you always take the share capital given, and then you divide this by what here, somebody? By the par value given there by the side. You divide by the par value. So remember, I'm interested in getting the number of ordinary shares of the subsidiary, not the parent, and to know this subsidiary. We bought 40,000 shares. How many shares does it have in total? So the share capital of this company they are calling, but they should not be calling it subsidiary by now, haven't yet known. So this particular company known as 𝐵𝐵𝐺𝐻, the share capital is 50,000. And the par value they've said is 1. So in total, number of ordinary shares here are 50,000. Then this means 40,000 divided by 50,000 times 100. What shareholding is this in terms of percentage? What shareholding is this in terms of percentage? What shareholding is this in terms of percentage? So 40,000 divided by 50,000 times 100. Please give me the figure. What are we getting here, somebody? What are we getting here, somebody? 80%. Nimrod is telling me 80%. So what do you think of 80%? Don't you think 80% is way too high? It is too high. 80% it is too high. 80% is too high. Automatically, that means what here? Control. Means that Nigeria is controlling who? Is controlling 𝐵𝐵𝐺𝐻. Means that 𝐵𝐵𝐺𝐻 automatically becomes what here? Becomes our subsidiary. Becomes our subsidiary. So I would want to count the number of months. So for me to count the number of months, I would be interested in knowing the date of acquisition and the date of the financial reports. So for me to be able to count the number of months, I would be interested in knowing the date when we acquired the subsidiary, the date of acquisition, and the date of the financial statements. The date of the financial statements. So the date of acquisition for sure is given here. The date of acquisition for sure is given here. The date of acquisition has been given here. We are told the date of acquisition, we are told Nigeria acquired 40,000 shares in 𝐵𝐵𝐺𝐻 on the first day of the accounting period. Oh, beginning of the year. Beginning of the year, right? There is nothing really here to count in terms of days. So we acquired these shares at the first day of the accounting period. And the accounting period, of course, starts, say, for example, here. If you look at the date of the financial statements, they haven't even given us the date. It's quite a simple example. But the thing is that we stayed with this subsidiary for a whole year. For a whole year. We stayed with this subsidiary for a whole year. So basically, we stayed with the subsidiary for exactly 1 year. Difference there is 1 year exactly. Difference there is 1 year exactly. Now, ladies and gentlemen, listen here. So the parent called Nigeria has got 80%. So who can give me the percentage of NCI? Who can give me the percentage of NCI? If the parent has got 80%, NCI will be taking the complementing percentage, 20%. Thank you so much. You leave it there. You leave it there. You leave it there. That is it. Now, ladies and gentlemen, after doing this group structure, what do you think will be the next thing to be done? After doing the group structure, what do you think will be the next thing to be done? What do you think will be the next thing to be done? What do you think will be the next thing to be done? After the group structure, please give me the next step. Goodwill. No. Pro forma. Go to the pro forma statement, not the PAP. Go to the pro forma statement. Go to the pro forma statement. Just go to the statement of financial position here. So that pro forma, go to the pro forma. Always go to the pro forma, because there will be some free marks to be earned there. There will be some free marks to be earned there. I appreciate what you guys are telling me, but the next thing that I would have done, even the one doing this, I'll go to the pro forma. I'll go straight away to the statement of financial. So I'll mention there, the name of the company is Nigeria Group. The Nigeria Group statement of financial position. Hata ina madate, achana nao namna hiyo, statement of financial position. Alafu na copy hiyo vitu toka juu mpaka chini. Unaanza na tangible na current assets. So naandika tangible, vimeandikwa tu hivyo tu, tangible non-current assets, tangible non-current assets, right? We have financial assets there. We have financial assets. The next thing is financial assets. Financial assets. The third thing there is investment in Lagos. So there is no way we shall have an investment in Lagos. Lagos is our subsidiary. We can't really talk of us investing in ourselves. Investment in Lagos will be replaced with what we call goodwill. Investment in Lagos will be replaced with what we call goodwill. And then now we have what we call the current assets. We have what we call the current assets. Now, after that, let me first of all allow you to copy whatever that we have here. Could you kindly copy this? I'm simply copying everything. Apart from investment in Lagos here that I've replaced with what we call goodwill, every other thing remains the same. So I'm simply copying this, everything the way it is, really. Everything the way it is. All right. So basically what we are doing here, not even about pro forma, what we are doing is just to lay down the general structure. We lay down the general structure of the balance sheet and the general structure of what here, the income statement. The general structure is what we are laying down, Now, ladies and gentlemen, after that, what do? I'll be having a section for what here, the total assets. So we have here total assets. We have here total assets. And then from there, now we go straight away to the equity and liabilities. Equity and liabilities. So equity and liabilities, we start with share capital. What do you know about share capital, my good students? We only pick one. These are free mark that I'm talking about. You only pick one. Share capital, you only pick one. Share capital, we always pick one, right? Is there somebody, can somebody in this case here guide us? So thank you very much. So for share capital, always you pick the one of the parent. You ignore the one of the subsidiary. So share capital, I'll come and pick 175,000. So for share capital, I'll simply come and pick here 175,000. The same case here with share premium, free marks really. Share premium. So share premium, what do I have here for share premium? So for share premium, the same. You pick the one of the parent. These are the free marks I'm talking about. So share premium, 50,000. Share premium, 50,000. So share premium, 50,000. I'll pick it the way it is. The parent only. If I were you, I would have written here parent. Here as well, parent. Free marks really, 50,000. Now, revaluation reserves, revaluation reserve. So revaluation reserve, if there will be any revaluations being done later on, then I'll come to add the post-acquisition revaluation, right? So in this case here for revaluation reserve, the figure that you have there, pick the one of the parent only, but with possibilities of being adjusted. So revaluation reserve, I'll pick 40,000 alone. 40,000 alone. 40,000 alone. So 40,000, but I can't take it here as the net. This one here may need some adjustments. So we have here 40,000, just like retained earnings may need some adjustment. Retained earnings may need some adjustments. So you pick the one of the parent only with room for what here, making adjustments later on with any post acquisitions. So retained earnings, 125,000, like that. Retained earnings, 125,000, like that. So we have here 125,000, like that. 125,000. I'm putting them here because later on I'll be doing some adjustments. Under equity, don't forget the non-controlling interest has to come there. Non-controlling interest is part of permanent source of funds. Permanent source of funds. So that's non-controlling interest. And from there, we go to the liabilities. So liabilities, what do we have? So on liabilities, ladies and gentlemen, what we have, and liabilities, ladies and gentlemen, what we have here, we have non-current, and then we have current liabilities. So we have your liabilities. So liabilities, we have the non-current liabilities, and then we have the current liabilities. Later on, I'll be bringing in the concept of a foreign exchange reserve, but let's do without it for now. That is very good. The moment you write like this, you'll end up getting so many marks without even knowing what you are doing. So we start with the first thing here, which is the tangible non-current assets. So tangible non-current assets, what do we have here for tangible non-current assets? Ladies and gentlemen, I can see Nigeria as 218,000 and Lagos as 100,000. So please come and combine the two. So 218,000 plus 100,000. 218,000, because consolidation is all about adding. So 218,000 plus 100,000. But now remember that these currencies are not compatible. They're not compatible. Steve, you can't do that. They're not compatible. You can't do that, Susan. So you can't do that. Remember, these are dollars and these are DNs. Right? They're not compatible. So meaning that I have to translate this 100,000. We normally translate figures over the subsidiary. You always translate figures of the subsidiary. So please tell me this 100,000 tangible and current asset, which rate should I use to translate it? Which rate should I use to translate it? Which rate should I use to translate it here? Which rate? The rates are given down here. The rates are given down here. The rates are given down here. The exchange rates are given down here. They're given down here. Which rate? Which rate should I use? Which rate should I use? Which rate should I use? Should I use from note number 5? From note number 5, should I use for start of the year, average rate, or end of the year? Which rate should I use? Someone talk to me. Talk to me tonight. Which rate should I use? 2. Thank you very much. 2. Closing rate. Always for the balance sheet, assets and liabilities here, always you shall use what we call the closing rate to translate. Closing rate to translate. So the question is these two. Should I divide 100,000 with the 2 or multiply? Should I divide or multiply? Should I divide or multiply? Should I divide or multiply? Yeah, divide, isn't it? So we divide with the 2 like that. So we're going to divide with the 2. Why are we dividing? It's because they have told us 2 DNs equals $1. How about 100,000 DNs? How about 100,000 DNs? If you cross multiply, at the end of the day, you'll realize you're supposed to be dividing. After all, I know that these are DNs and these are DNs. And if these are DNs and these are DNs, there is no way you can do what you can multiply DN with DN. You'll end up getting DN squared. No way. You can never. If it's DN and DN, the only way of doing away with the DN is to divide for purpose of them being what here, for purposes of, in this case, you're doing what here for purposes of canceling DN and DN. You divide like that. Don't yet pick up your calculator. No. Don't pick up your calculator, because later on, I'll be bringing in the issue of what here, revaluations. Remember, later on, we shall be bringing in revaluations. Great. Now continue here. Go to the next item. The next item, ladies and gentlemen, what do we have in the next item? So in the next item, what we have here in the next item is the financial assets. Financial assets, this is basically a free mark thing, because it is 22,000 plus 0. 22,000 plus 0 is free mark. I love free marks in group consolidation. So 22,000 plus 0, 22,000 here plus 0. So meaning there is no translation really of the subsidiary figure, because 0, cannot be translated. So it means this one I can come and simply take 22,000. I can come here and simply take my 22,000 here. I can come and take my 22,000 there, right? Final figure. Goodwill, of course, we need a working for this. I'll be doing the working later. Now go to the current assets and combine them. So current assets, you are combining them. So current assets, I can see 90 plus 209, 600. So 90,000 plus 209, 600. But remember, these are DNs. We still need to retranslate them to the dollar. So remember, we said when we started that all assets and liabilities will be retranslated at the closing rate. So here, divide this again by, uzuri ukianza kudivide, consistently unadivide paka chini. Ukianza kudivide, hakuna mambo ingine tena. I like this section of the equities and liabilities, especially the equity, because there is nothing like really doing a lot of working. No. Right? So I'll skip all these up to the non-current liabilities. So we go to the non-current liabilities. So on non-current liabilities, what do we have here? So on non-current liabilities, I'm consolidating, I'm combining. And the non-current liabilities, ladies and gentlemen, non-current liabilities, what I can see here, we have an non-current liabilities, I can see 15,000 plus 88,000. But remember, these currencies are different. And we must retranslate the ones of what here? The subsidiary. So I'll take 15,000 plus 88,000. But now the 88,000 still falls under assets and liabilities. It has to be retranslated. So we have here an non-current 15,000 plus what here? 88,000. But now this has to be divided by 2 like that. And remember, this 2 is only dividing this like that. So go straight away to the current liabilities. So under current liabilities, what do we have? Current liabilities, ladies and gentlemen, what we have here under current liabilities are this. I can see 25,000 plus 11,600. 25,000 plus 11,600. So 25,000 plus 11,600. But for purpose of having the same currency, this one has to be retranslated at the closing rate. Ladies and gentlemen, after you do that, now what will be the next thing to be done? Listen and listen to me very well. Now we embark on the workings now. And of course, the very first working that we shall deal with, first of all, is not the very first working that I shall deal with, first of all, is not even the goodwill. No, the first working that I will start with, ladies and gentlemen, the first working that I'll start with, ladies and gentlemen, is not goodwill, trust you me, is not goodwill. I would want to evaluate the net assets of the subsidiary. So I would want to evaluate the net assets of the subsidiary. These subsidiaries that we are acquiring, are the net assets good enough? So I would want to come here and start with the net assets of the subsidiary. 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 So please go ahead and give me the net assets of the subsidiary. So now we are dealing with the net assets of who? The net assets of the subsidiary. Net assets of the subsidiary. So net assets of the subsidiary. 3 marks really. 3 marks really. So remember, net assets, we have to give us net assets at acquisition, and at reporting. 2 of them. At acquisition and at what year? At reporting. So could you be kind enough and give me examples of net assets? When they talk of net assets, what comes to your mind? When these examiners talk of net assets, what comes to your mind? Can somebody talk to me? Thank you very much, Nimrod. Things like equity, share premium, isn't it? Retained earnings, isn't it? Things like that. Fair value adjustment, right? Thank you very much. Yes. The equity section, I love that. The equity component, yes. So the first equity component there, we are told is share capital. The first equity component there is share capital. It is share capital. Share capital. Then we have a share premium. We have share premium. Then we have retained earnings. Retained earnings. Then we have, in this case here, fair value adjustment. And then, of course, we have a depreciation on the fair value adjustment. Depreciation on the fair value adjustment. We have depreciation on the fair value adjustment. We have depreciation on the fair value adjustment. So I know you have that question. So I would want us to go very slowly. So we start with share capital. So the share capital that I can see there is how much? Can somebody give me the share capital that I should pick here very fast? The share capital that I should pick here very fast is how much? Share capital that I should pick very fast is how much? Please don't fear talking to me. Just give me some figure there. Just give me some figure there. Give me some figure there, somebody, without fearing anybody. Without fearing anybody. How much should I pick there? Remember, you're talking of net assets of the subsidiary. Here, we shall not pick net assets of the parent at all. So net assets of the subsidiary, the first there, ordinary shares that I will pick are ordinary shares of Lagos, our subsidiary. And because I'm picking this figure from the statement of financial position, then the 50,000 should come here, 50 at reporting, right? And then I can see the premium there, 10,000, the premium for the subsidiary, for Lagos. Reserve, there is no reserve there. I can see retained earnings. Retained earnings, what do we have, ladies and gentlemen? Retained earnings, we have 150,000. Retained earnings at the end. Share the question. Share the question. Already you have the question. Check your group. 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 Great. Great. And then do we have any fair value adjustment? Fair value adjustment, ladies and gentlemen, we do have the fair value adjustment. If you look at note number 2, at the date of acquisition, the fair value of Lagos non-current asset, which at that time had a remaining useful life of 10 years, exceeded their book value by DN 10,000. So in this case here, fair value at the date of acquisition, so the fair value adjustment at acquisition is 10,000. 10,000 like that. And then you know that fair value adjustment at acquisition must always be equal to fair value adjustment at reporting. So here 10,000 again, like that. The same case with share capital. Share capital at reporting and share capital at acquisition must always be the same, 50,000 like that. Same case with the premium. This has to be 10,000. What is different always is these retained earnings. Retained earnings is normally different. And if you read note number 1 very well, they told us Nigeria acquired 40,000 shares in Lagos on the first day of the accounting period for DN 400,000. When the retained earnings were DN 50,000, retained earnings at acquisition. Retained earnings at acquisition were 50,000. Retained earnings, I'm repeating again. Nigeria acquired 40,000 shares. I'm reading note 1. Nigeria acquired 40,000 shares in Lagos on the first day of the accounting period for DN 400,000. When the retained earnings were DN, retained earnings during acquisition were 50,000. Now, the only thing that I would expect you guys to give me is the depreciation on fair value adjustment, which is never here. Depreciation on fair value adjustment always comes in and it's a deduction, right? So they have given us a policy from note number 2. Wamesema at the date of acquisition, the fair value of Lagos non-current assets, which at that time had a remaining useful life of 10 years, exceeded their book value. So what I'll do to be able to get this depreciation on fair value adjustment, you always take the fair value adjustment itself, and then you divide by the remaining useful life. Of course, in this case here, times time apportionment, if there is any. Times time apportionment, or just time. Can I talk of just times time, like that? So fair value adjustment, ladies and gentlemen, fair value adjustment, in this case is the 10,000, of which they're telling us that by the time we were doing this devaluation, the asset had a remaining useful life over 10 years. And if you remember when we began the question, we said that since buying the subsidiary, and by the end of the reporting period, we had 1 year that had lapsed. So times one. So then these will end up giving us a cool how much here? 1,000 shilling, being the depreciation on the fair value adjustment. So this is what I will bring here. This is what I'll bring there. And then I would expect now you guys to give me the total figures. You give me the total figures. Give me the total figures. Give me the total figures. Remember, net assets are always assets of who? Just the subsidiary. Net assets of the subsidiary. The moment you capture that, you will end up getting so many marks without you knowing even what is happening, right? Without you knowing what is happening. And really, that is the major thing. That is the major thing, very important thing. So can somebody in this case here come and give me, the total net assets at acquisition? Total net assets at acquisition. Can somebody give me something here? So we have here 120,000. Thank you very much. So 120,000 here. Yes. How about net assets at reporting? 210,000. So do we have a difference between the two? What is the difference between the two? What is the difference? What is the difference between the two? What is the difference between the two? 90,000. The difference between the two is 90,000. The difference between the two is 90,000. So the difference between the two is 90,000. So 90,000, you get the difference here. So the difference is 90,000. What name do we give to this difference? What name do we give to this difference? What name do we normally give to this difference? Yes, it is post-acquisition profit. We normally call it the 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 post-acquisition profit. So we normally call it the post-acquisition profit. I love that. Post-acquisition profit. Post-acquisition profit. So are you sure that you subtracted this thing very nicely, really? Are you sure that you worked this thing out very nicely? Are you sure that this working is okay? Are you sure that this working is okay? It's 219,000. Let's not mess up things because it will not really balance. The balance sheet will not balance. It's supposed to be 219,000. 219,000. It's supposed to be 219,000. So meaning at the end of the day that the difference should be equal to what here somebody. The difference should be equal to what here somebody. The difference between this and this. the difference between this and this, 219 minus 120,000, 99,000, isn't it? So this should be 99,000. This should be 99,000 like that, 99,000. 99,000. I love this. I really love this. I love this. There's a student who wants me to repeat something on this fair value adjustment, the evaluation of assets of the subsidiary when you are acquiring them. So like now here, they have told us something very nice. They have told us something very nice. They've told us something very nice. They've told us here at the date of acquisition, the fair value of Lagos non-current assets, which at that time had a remaining useful life of 10 years, exceeded their book value by DN 10,000. So remember, when you acquire a subsidiary, it will be very important for you to have the assets here valued afresh. And when this valuer came, he realized that the assets, everything else was okay, apart from one item whose fair value was higher than the book value. So this is what we are calling fair value adjustment. The fair value adjustment of our assets here, you can see it's a positive 10,000. So you'll be able to have positive 10,000 acquisition, and the same figure is replicated where? Here. Then after you do that, always this fair value adjustment has to be depreciated, of which they have told us that the remaining useful life of the asset after the revaluation is 10 years. So it took 10,000 divided by 10, which gave us 1,000. And it's supposed to be lost in value. It's supposed to be lost in value. It's supposed to be lost in value. Okay. Yeah, it had been valued upwards, yes. It had been valued upwards. Ladies and gentlemen, I would want you now to listen and listen to me very well. Remember, the currency here is still the N. The currency there is still the N. This is the currency of our subsidiary. But you see, we are supposed to translate these things. So please come here and translate them. Come here and translate. Translate. So remember, these are net assets at acquisition. So at acquisition, please use the acquisition rate. Use the acquisition rate. So do we have the acquisition rate? At acquisition, use the acquisition rate. Do we have the acquisition rate? Oh, yes. Remember, we acquired this subsidiary at the start of the year. So the acquisition rate here is 4. So to translate net assets at acquisition, always use the acquisition rate. So this one, I'll divide with 4. This one, I'll come and divide this with 4. And then we have net assets at reporting. So please, this one, use the closing rate. Use the closing rate. The closing rate. So do we have the closing rate? Oh, yes, we do. The closing rate we've been given here, the closing rate. They have given us end of the year. This is the closing rate. It is 2. The closing rate 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 here is 2. So the closing rate is 2, like that. And then now listen and listen to me very well. Remember, we have some post-acquisition profit. When we subtracted this and this, we got a post-acquisition profit. This post-acquisition profit here will always be translated at the, it's a profit. It's an income statement item. Profit is always translated using the average rate. The average rate. So come and look for the average rate. Look for the average rate. Look for the average rate. And then we use it here. Look for the average rate. And then we use it here. So come here and divide this by the average rate. So divide this by the average rate. So the average rate has been provided. Average rate has been provided. It's 3, like that. So divide this by 3. Divide this by 3. So could you kindly give me now these figures here, somebody? Could you kindly give me these translated figures? The translated figures. So give me the net assets at acquisition, how much I write here. Right. So I want to write the translated figures here. Translated using different rates. Now I'm talking of dollars now, right? So what is 120? So somebody is giving me a figure of 30,000. 120 divided by 4, somebody is giving me a figure of 30,000. Thank you very much. And then now we have 99,000 divided by 3. 33,000, 33,000, 33,000. And then we have the last one, which is 219,000 divided by 2. 219,000 divided by 2. 219,000 divided by 2. 219,000 divided by 2 gives me what figure, somebody? 219,000 divided by 2 gives me what figure, somebody? They're not talking to me. They're not talking to me. 109,500. 109,500. So please, ningetaka uchukue highlighter ya yellow, alafu highlight this entire thing. Just a yellow highlighter. I would want you to highlight this entire thing. Please highlight this entire thing. A yellow highlighter, highlight this entire thing. Highlight the entire thing. And the moment you highlight, please let me know that you have been able to highlight. Because this now marks the end of our net assets. We've been able to get the net assets of the subsidiary at the rates of what here? At the currency of where it is based, the DN. And then at the end of the day, we were able to retranslate those net assets, including the post-acquisition profits, to the parent's currency. So could I kindly know whether you guys have been able to translate this? Have you been able to translate this? Have you been able to translate this? Have you been able to translate this? They're not talking to me. They're not talking to me. Yes. Now, after that, now we go to the most important stage. We go to the most important stage. Come and give us what we call the group exchange difference. Give us the group exchange difference. When you are translating here, there will be exchange differences. How do these exchange differences come about? Listen and listen to me very well. When you take 120,000 plus 99, can somebody help me with this stupid thing? Can somebody help me with this stupid thing? Can somebody in this case here give me 120,000 plus 99,000? Please add this and this. 120,000 plus 99,000 gives me what? Somebody. 120,000 plus 99. Somebody give me this stupid operation. 120,000 plus 99,000 gives me what? Somebody. It gives me 219,000, which happens to be the closing here, which happens to be the closing. So there is perfect match. How about these translated figures? Can somebody take 30,000 plus 33,000? Can somebody take 30,000 plus 33,000? Are we really going to get this figure? No. That is an exchange gain. Is an exchange gain. Is an exchange gain. Is an exchange gain. So then how do we get this group exchange difference? I will take the closing. I'll take the closing 109,500. I subtract the sum of these two. I subtract the sum of these two. So we are talking of 30,000 plus 33,000. So could you kindly give me this figure? The group exchange. The group is gaining here. The group exchange difference. So the group exchange difference, we have 46,500. 46,500 is the gain. The gain in translation. The gain. It's a gain because we took here the closing minus the sum of this. We expected the sum to be 66, but has given us something more. So, ladies and gentlemen, this group exchange difference is a gain. This is a gain. This is a gain. This is a gain. A gain over how much? I'm being given 46,500. So whenever we have any gain, ladies and gentlemen, remember, you're going to give this out to the two owners. The two owners. Who owns this company? Who owns this subsidiary? It is owned by the parent and the NCI. So please go ahead and share these out. Go ahead and share the group exchange difference out. Please share it out. Please share it out. Go ahead and share these out. Go ahead and share these out. Please go ahead and share these out. So we are sharing this. We are sharing this, my good students. So we are sharing this 46,500. So this 46,500 will be shared to the parent, of course, through the group retained earnings, and then we have NCI. So the question is, do you know the parents? Do you know the parent? Do you know the parent's percentage? The parents' percentage, do you know the parents? It was 80%, isn't it? And NCI was 20%. And I can see this student telling me 46,500 times 80%. I can see they have already given me the figure. I can see they have already given me the figure. I can see they have already given me the figure. What figures are they? Parent is 37,200. The parent is 37,200. 37,200. 37,200. And then we have, ladies and gentlemen, NCI. NCI is 20% of this. So NCI, I'm being told, is 9,300. NCI 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 is 9,300. So you can start building up the NCI. So this non-controlling interest, please come and put brackets there. Already I can see they have 9,300. 9,300. Already I can see they have 9,300. I can start that. I can start that. That's very good. That's very good. That is very good. That's very good. That's very good. That's very good. Great. And then, of course, if you have some space, of course, you must create some space there. We need the foreign exchange. You know, foreign exchange reserve is part of the equity. We need the foreign exchange reserve. It's part of equity. My space here is so much constrained, but I know you guys can come and even add it somewhere. I know you guys can add it. I don't know whether you'll be able to see this. It's foreign exchange reserve. Foreign exchange reserve, very popular. So foreign exchange reserve, this one here, the one that we have been given, the one of the parent, it will go to the equity of the parent. But don't take it as the last figure here. We'll still have something. So foreign exchange reserve, you're just writing as a working 37,200. As a working 37,200 there. Foreign exchange reserve. Not very clear. I don't know whether you've been able to write yours very well. Fix it. Be Mr. or Madam, fix it. Have you been able to fix your foreign exchange reserve under the equity? JS says yes. Please fix it there. 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 Now, is it not affecting retained earnings? Retained earnings. Retained earnings. Don't worry about that. We shall reach there. Don't worry about that. Great. Great. Ladies and gentlemen, after that, let's go to goodwill. Let's go to goodwill. Let's go to goodwill. So the next working here will be the working of goodwill. The next working there will be the working of goodwill. Will be the working of goodwill. Will be the working of goodwill. Goodwill. So let's go to goodwill. So is there somebody who can remind us how do we normally calculate goodwill? So remember, this is goodwill of the subsidiary. So we shall use the subsidiary's currency at first. We shall use the subsidiary's currency at first, which is the DN, right? So in this case here, come and give us the consideration of the parent. Consideration of the parent. Give us the 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 consideration of the parent. Have you been given how much? In this case here, the parent. Ladies and gentlemen, have you been given how much? The parent. Have you been given the parent? The parent in this case here paid how much for the subsidiary? They're not talking to me. Perhaps they don't have the question. Perhaps they don't have the question. So Mary tells me the parent paid 400,000. The parent paid 400,000. And this has to be in terms of what are the DNs. Now, of course, the parent never bought this subsidiary 100%. We have the consideration of NCI. The consideration of NCI at acquisition. The consideration of NCI at acquisition. Are you able to see at acquisition NCI walikuwa worth ngapi at acquisition? Have they given us NCI at acquisition? NCI walikuwa worth ngapi at acquisition? NCI walikuwa worth ngapi at acquisition? NCI walikuwa worth ngapi at the date of acquisition? The fair value, blah 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 blah. Blah 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 blah. So you're told somewhere here Nigeria acquired 40,000 shares in Lagos on the first day of the accounting period for DN, like that, when the retained earnings were DN 50,000, and the fair value of NCI was 30,000 DN. So you can see everything is in terms of what here, DN. Everything is in terms of DN. So again, consideration of the NCI at the date of acquisition. They have told us it's 30,000. So come and give us the total now, total consideration. So give us here the total consideration. So that will be 430,000. Is it for 30 or was it 30 or 50? Let me check again. Was it 30 or 50? Let me check again. Yeah, it's 30, yes. It is 30, thank you very much. It's 30, thank you very much. It is 30, thank you very much. Ladies and gentlemen, from there, in this case here, come and give us the net assets. So less net assets at acquisition. Less net assets at acquisition. This figure, I rubbed my figure a long time ago. Are you able to remember the net assets at acquisition? Are you able to remember the net assets at acquisition? You have that table up there. Is it 120,000? 120,000. So please subtract. Whatever you'll get is called goodwill. Goodwill. Whatever you get here is called goodwill at acquisition. At acquisition. It's called goodwill 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 at acquisition. So they're giving me a figure of 310,000. 310,000. Thank you very much. So less any impairment. So less impairment. Are you able to see any impairment? Are you able to see any impairment? Have they given us any policy regarding impairment? Impairment, no impairment, isn't it? So impairment is 0. Impairment is 0. And then when you subtract there, we'll be able to get what we call goodwill. Goodwill at reporting. So goodwill at reporting. So goodwill at reporting basically will be 310,000 like that. 310,000. I wish I had some space here, but immediately I get this goodwill of a foreign subsidiary. The next thing that I should do is to retranslate the goodwill. So you retranslate the goodwill. So retranslate the goodwill. So retranslate here the goodwill. So retranslate the goodwill. Retranslate the goodwill. So how do we do this? You start with goodwill at acquisition. So goodwill at acquisition. So goodwill at acquisition was 310,000. So at acquisition, I should be able to translate this at what rate? If you remember, I should divide this with what somebody, if you remember, at acquisition, I should divide this with what somebody. Yeah, acquisition rate, isn't it? The acquisition rate, most of them are forgotten. The acquisition rate, when you were acquiring this subsidiary, the rate was 4. The rate was 4 there. The rate was 4. 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 So divide this by 4. And then we have impairment. Impairment, ladies and gentlemen, impairment is an income statement item. It is 0, but for your revision, impairment has to be translated always at average. Impairment has to be translated at average. So what is the average rate for your revision? What is the average rate for your revision, ladies and gentlemen? What is the average rate for your revision? They are not talking to me. The average rate for your revision inakuja ngapi? Pata potea. Inakuja 3, eh? For your revision, inakuja 3. So of course, this will be 0, of course. And then lastly, we have now goodwill at reporting. So we have goodwill at reporting. Lastly, we have goodwill at reporting. So goodwill at reporting, it's still 310,000. So I'll take 310,000. At reporting, I should translate this at what amount? At what rate? At reporting, I should translate this at what rate if you're following? If you're following. 2. Thank you very much. So could you kindly give me these figures? I know this one here will be $155,000. 155,000. How about this? 310,000 divided by 4. 310,000 divided by 4. These are dollars, remember now. These are dollars, we are retranslating them. So 310,000 divided by 4 gives me $77,500. $77,500. So just like we did with net assets, now go ahead and give us the group exchange. The group exchange difference. The group exchange difference. It's again, I can see here, the group exchange difference for goodwill. So group exchange difference. So the group exchange difference, it's again. So I will take in this case the closing. The closing amount is 155,000 minus these two added together, minus 77,500 plus 0. Just for your revision, just include there 0. So how much do we have there, somebody, as our group exchange difference? As our group exchange difference, what amount do we have there? As our group exchange difference, what amount do we have there? Yeah, 72,500. 72,500. Be given a figure of $72,500. $72,500. $72,500. $72,500. 72,500. Is it 72 or 77? Where are they getting 72 from? I don't know. I think they are correcting there. So they're telling me it is 77,000. So once I get this 77,500, please share it out. Share it out. The parent vis-a-vis the NCI. Remember, this is 80%, and this is what we call 20%. 80% and 20%. Please give me the figures. So we have here Nimrod telling me that should be 62,000 here. 62,000. Thank you very much. How about NCI? NCI is 15,500. NCI is 15,500. So remember, this will not go to the group retained earnings. This will go to the foreign currency reserve. This will go to the foreign currency reserve. In the income statement, these revaluations which come as a result of what here, foreign currency translation, will go to what we call other comprehensive incomes. These amounts are never available for what? For sharing to the group owners as dividends. You cannot come and tell people upon retranslating our subsidiary, this is not an income, it's not a genuine income, right? It's just like revaluation. Remember, under other comprehensive incomes, OCI, what do we have under OCI? Under OCI, we normally have revaluations and foreign exchange gains or losses. This is not a gain that you're going to give to the owners. Later on, you can declare dividends from here, right? Right? So it has to go to the foreign currency reserve. Foreign currency reserve. So I hope you've been able to write. It's normally called FCR. Foreign currency reserve. So in your foreign currency reserve, could you kindly come to your foreign currency or foreign exchange reserve and add there plus what here, somebody? Plus 62,000. Plus 62,000. And this is all for the foreign exchange reserve or foreign currency reserve. So could you kindly give me this figure? What is 37,200 plus 62,000? Please give me that figure. Please give me that figure. Please give me that figure. Under the foreign currency reserve or exchange reserve, how much do we have there? How much do we have there? They're not talking to me. I would want us to close this because this is not very clear. Remember, foreign exchange reserve or foreign currency reserve normally will come from retranslations of our net assets and the goodwill. And the goodwill. The translation of our net assets and the goodwill, only that. So somebody is giving us 99,200. I'm doing very well. 99,200 like that. You leave it like that. And then NCI is getting some other income. NCI, lakini NCI usifunge because later on we shall be bringing something ya NCI. Kuna kitu moja NCI inakosa hapa. NCI usifunge bracket, hapana, kuna mambo inaendelea. NCI kuna mambo inaendelea. Great. So now we are almost home. Now we are almost home. So ladies and gentlemen, let's now get back to business. Let's get back to business. Let's read the not requirements, but the additional notes. Let's read the additional notes. Let's read the additional notes. What do we have there? The additional notes. Here we have them. Now we are basically coming to the end of this. We are basically coming to the end of this. Haya, so tuanze na hii straight away. Sasa tunamaliza. Nigeria acquired, already have been able to take care of this. Let's take care of number 2. At the date of acquisition, the fair value of Lagos non-current assets, which at that time had a remaining useful life of 10 years, exceeded their book value by DN 10,000. So can somebody in this case here advise me? Can somebody in this case here advise me? What do you think in this case here shall I do? Shall I do? Shall I do here now? What shall we do there? What shall we do there? Abracadabra. Abracadabra. What do we have there? There is something we need to do there. There is something we need to do there. They are not talking to me. There is something still we have to do here. There is something still we have to do here. There is something we have to do here. When we revalue our assets upwards, what do you think of our property, plant, and equipment? What do you think of our property, plant, and equipment? What do you think of our property, plant, and equipment? So our property, plant, and equipment will increase. So we need to come and do an analysis of this fair value adjustment. So this fair value adjustment, I would want to be very clear here. This fair value adjustment, ladies and gentlemen, remember at acquisition, we did a revaluation upwards of how much? Of 10,000, right? But remember that there was depreciation. There was depreciation over how much? Over 1,000, over 1,000, over 1,000. So then what is the net book value of this fair value adjustment at the end of the year? At the end of the year, 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 this will be 9, not 99. This will be 10,000 minus 1,000, which gives me how much here? Somebody 9,000 like that, which is DN, which is DN. And I would want, ladies and gentlemen, this fair value adjustment, I want to bring it and incorporate it up here in the PPE. It's an increase in my PPE value. But now remember the way things are, I'd already begun doing the retranslations. So can somebody tell me what rate should I use to retranslate this? What rate should I use to retranslate this 9,000? Is it 2 or 4? Somebody now talk to me. Now you guys are becoming professionals. Is it 2 or 4? Is it 2 or 4? And because it's net book value at the end. It's net book value at the end. It's net book value at the end. So it should be what here? Somebody should be 2. It should be 2. So could you kindly come and divide this with 2? So what are we getting here? This automatically will be 4,500. Please include this figure here. So plus 4,500 and give me an answer now here. Please include that figure there of 4,500 and then you give me an answer. Now you can now add everything. Give me a figure to put there. 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 Are they talking to me really? Are they talking to me really? Are they talking to me? 272, they're giving me 272,500, right? 272,500, right? 272,500. 272,500. Hebu tuende pole pole hapa. 272,500. Tuende pole pole hapo kwanza. 272,500. 272,500. Tuende pole pole kabisa hapa. Nipatieni goodwill. Goodwill at reporting, how much should I write? Goodwill at reporting, how much should I write here? Goodwill at reporting. Goodwill at reporting, remember we already have the figure. Goodwill at reporting, I already have the figure. Goodwill at reporting, already mimi niko na figure. Goodwill at reporting, already mimi niko na figure. 310 hapana, ulisha translate wewe. Kumbuka ulisha translate. Kumbuka all these figures now are in form of what here? Dollars. In dollars, ulisha translate. So ni 150 what here somebody? 155,000. Inakuja 155,000. Thank you very much. How about current assets? Really nothing much there. Current assets, nothing much there. Could you kindly give me these current assets? Kindly give me these current assets. Is there somebody who is able to give us these current assets? Abracadabra. Is there somebody who is able to give us these current assets? Abracadabra. 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 Is there somebody who is able to give us the current? 194, 194, 194, 194. Wanasema ni 194. Kwa kidogo. Wanasema current assets at ni 194,800. Current assets ni 194,800. So hebu kujeni mnipatie total. Kujeni mnipatie total. Total assets. Hebu add zote. Mweze kunipatia total assets. Add zote. Mweze kunipatia total assets. Add zote. Mnipatie total assets. Add zote. Mweze kunipatia total assets. Total assets. Wanasema ni 644,300. 644,300. Thank you so much. 644,300. 644,300. Thank you so much. Thank you so much. Sasa kutoka hapo share capital hiyo iko sawa sawa kabisa. Share premium hiyo iko sawa sawa kabisa. Sasa kuna hii revaluation reserve. Kuna revaluation reserve. So this revaluation reserve, what do we have? Under revaluation reserve, ukiangalia vizuri, there was no disturbance. Assets of the parent were not revalued at all. The only revaluation that we had was revaluation in the subsidiaries' assets, and that has already been incorporated in the net assets of the subsidiary and shared out equitably. So the revaluation reserve, this is not going to change at all because there is nowhere they have told us that the revaluation of the parent was affected. No, nowhere in those notes, nowhere. Right now, from there we have the foreign exchange reserve that already you have given me. Now, through the non-controlling interest, this is a very interesting one. Actually, I would want to take this candle. 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 Hii ningetaka tuifanye kando hiyo. Your non-controlling interest is a very interesting one. I love it. I love this non-controlling interest. So non-controlling interest, I love this one. Hii wanafunzi wengi wawezangi. Hii si wengi wanaweza. Non-controlling interest, kulikuwa na NCI at acquisition. Hebu niambie ilikuwa ngapi somebody? NCI at acquisition ilikuwa ngapi? NCI at acquisition ilikuwa ngapi? NCI. Yes, I'll come back to it, no problem. Thank you for that. Tufanye tushaanza hii, tumalize hii kwanza. NCI at acquisition. NCI at acquisition ilikuwa ngapi? Woye waniongeleshi. NCI at acquisition ilikuwa ngapi? Woye. NCI at acquisition ndio hii hapa. Mimi napenda sana hii. NCI at acquisition ndio hii hapa. 30,000. Fair value at acquisition 30,000. Si ni kweli? NCI at acquisition 30,000. But now remember that this 30,000 is in foreign currency DN. I need to retranslate this. I need to retranslate this. So can somebody tell me? Of course, I know I'm dividing. So what should I divide here this with? Should I divide this with 2 or 4? Should I divide this with 2 or 4 when I'm retranslating here? Should I divide with 4 or end of? It can't be end of the year. It has to be at the start of the year when I was acquiring. Why am I saying that? Because you can even see here. We are saying NCI at what year? At acquisition at 4. So come and divide this with 4. Could you kindly give me this figure? Kindly give me this figure. Kindly give me this figure. Yeah, right. So 7,500. Thank you very much. Now, in this case here, these guys, we gave them something from exchange difference. Exchange difference, if you remember, we gave them something. We are not mean. We gave them something from exchange difference as regards changes in net assets. Is there somebody who can remember what we gave these guys? When we had a group exchange difference, we apportioned to the parent and NCI. We gave them something. We gave them something. These are not talking to me tonight very nicely. We gave them something here, 9,300. We gave them something. And remember, this 9,300 is already translated. These are already translated. These are dollars now. These are dollars. We also gave them something from exchange difference of goodwill. We also gave them something. We also gave them something. Is there somebody who is able to remember? Is there anybody who is able to remember this? 15,500. We gave them something, and already this is translated, 15,500. Also, these guys must always get what here? A share of PARP. They must always get a share of PARP. So is there anybody who is able to remember our PARP figure? Is there anybody who is able to remember our PARP figure? It was in DNs. Is there anybody who is able to remember our PARP figure? Is there anybody who is able to remember our PARP figure? Our PARP figure, 99,000. 99,000 DNs. So these 99,000 DNs, we are only giving them their share. But again, remember, this has to be retranslated to get into dollars. It has to be retranslated. This has to be retranslated. This has to be retranslated. Can somebody in this case here give me the translation rate? Should I use 4 or 2? What should I use here, somebody? 4 or 2? Should I use 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 4 or 2? In this case here, this PARP. Should I use 4 or 2? No. Remember PARP, we said something very interesting. We said that PARP is a profit figure. And if it's a profit figure, it has to be with what here, somebody 3. Actually, we had even translated this, remember. We had even translated this to about at 3,000. So I'm supposed to come and divide this with 3. So could you kindly take now this and then give 20% to these guys? Give 20% to these guys. 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 Tell me in this case here, what do we have? So we have 6,600 I'm being told. 6,600 I'm being told. 6,600 I'm being told. So, and that is it. So please come and give me the NCI in form of dollars total inakuja ngapi? In form of dollars total inakuja ngapi? Come and give me the NCI. Come and give me the NCI in total itakuja ngapi? Aha, wanasema hapa Marietta 38,900. So NCI. So you can mention here working. I don't know how you can call it working 10 or whatever for a revision, but I'm being told that this is supposed to be 38,900. 38,900. 38,900. 38,900. So remember, this is permanent source of what here? Capital. This is permanent source of capital. Permanent source of capital. Now from there, the last one that you're supposed to come and pick is this retained earnings. Retained earnings. Group retained earnings. So group retained earnings, what do we have there? Group retained earnings, what do we have there? So group retained. So can I wrap this? 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 Let me see. Can I wrap this? Yeah, or something. Yes, thank you very much. So from there, I will look at my retained earnings, group retained earnings. So group retained earnings, group retained earnings, group retained earnings. So group retained earnings, ladies and gentlemen, what do we have there? For group retained earnings, I have the parents retained earnings. I have the parents retained, hizi sina shida nazo ziko in dollars already. So the parents retained earnings hapa ni ngapi? The parents retained earnings washanipatia. The parents retained earnings washanipatia. Parents retained earnings. Thank you very much. I can see now you guys have an idea. Parents retained earnings. Parents retained earnings tuko nazo ni ngapi from the balance sheet? Parents retained earnings from the balance sheet. What do we have here? Parents retained earnings from the balance sheet. Parent retained earnings from the balance sheet. So from the balance sheet, the parents retained earnings from the balance sheet. From the balance sheet, the parents retained earnings from the balance sheet. Right? 125,000, isn't it? 125,000. 125,000. So here we have 125,000. So 125,000. So remember here we can only bring what here? The share of POP. Share of POP alone. So share of POP, it will be 80% of the 33 or 99,000, but divided by 3. So could you kindly give me this figure? Itakuja kuwa ngapi somebody? So please don't forget that the exchange differences can never go to the group retained earnings. They'll be going to a special fund called foreign exchange reserve or foreign currency reserve. It's only POP that can go to the group retained earnings here, of which I can see Marietta giving me 26,400. So, and that is it. So please add. Please add here, give me the group retained earnings. What figure do we have for the group retained earnings? If you add the two, what is the figure that we have for the group retained earnings? The figure that we have for the group retained earnings inakuja 151,400. So now here we have 151,400. Please try to squeeze it somewhere there. Try to squeeze it somewhere there. 151,400. Now go to the non-current liabilities. Go to the non-current liabilities. Non-current liabilities. Go to the non-current liabilities. Non-current liabilities. What do we have here? Non-current liabilities. Non-current liabilities. This one is just a matter of punching. A matter of punching. So I'm being given 59,000. And then we have the very last one, which is the current liabilities. The current liabilities. What do we have there? Current liabilities. What do we have there? Somebody, current liabilities. Current liabilities, 83,000, eh? Current liabilities. Did I pick it wrongly? Remember, for current liabilities, we are supposed to take what plus what? Current liabilities. Please check your current liabilities. It's supposed to be 25,000 plus 11,600. It cannot be that big. It is 3,800, yes. It is 3,800 like that. So could you kindly come and give me the total equity and liabilities? Go ahead and give me the total equity and liabilities. Go ahead and give us the total equity and liabilities. Go ahead and give us the total equity and liabilities. Total equity and liabilities. You add now everything. You add everything. Total equity and liabilities. You add everything. You add everything now. 611, 644, 300. 644, 300 should be exact na hii. Should be exact na hii. Lazima we miss out on something where 644, 300 should be exact. Should be exact. Yeah, that's what happened last semester. Very many students were adding dollars and DNs. We're adding, in this case here, currencies which were not compatible. We're adding currencies that were not compatible. We're adding currencies which were not compatible. They were adding currencies that weren't compatible. Can Kaleta shida sana. Kaleta shida sana. So I'll only do 2 questions here. I've done this is my first question, your balance sheet. Yeah. Right. This is the only question your balance sheet ambayo nimefanya ya foreign subsidiary. I'll now proceed to do the income statement. And then I'll do the one that came last semester, and that will be the end of that. That will be the end of this particular area. Right? Now from there, I'll be left with step acquisition, disposal, and the group cash flow. Group cash flow. Group cash flow. Right? And then now, of course, we also get time to do what here? To do like 1 or 2 past paper. But the thing is, these things are very, very similar. These things are very, very similar. And again, you don't have to do the entire question. You can see myself, and I'm an experienced teacher. It has taken me more than 1.5 hours to do this question up to here. So what about yourself who is going to do this thing for the very first time? If I were you, I would have only done up to the pro forma, done net assets. Net assets are very important, and maybe goodwill. The others, as somebody called JS there told us, you will leave the examiner to do the other workings. You'll end up getting so many marks without even knowing what you're doing. And really, that is the essence of an accountant. An accountant is all about what here? Confidence. You must be very confident. You must be very confident. Now, ladies and gentlemen, given this little time left, we need to go ahead and capture the income statement. We capture the income statement. The income statement now. The income statement, very easy. This is the easiest, consolidated income statement. So we are told here, ladies and gentlemen, we are told here, they have given us a statement of profit and other comprehensive income. So we have, first of all, the statement of profit or loss. And then we have other comprehensive incomes. So under other comprehensive incomes, I have revaluation, and then I'll be bringing here something called what here? The foreign exchange, foreign currency exchange. It also falls under other comprehensive incomes. So what I'll do is to write the name first. We write the name of the group, write the name of the group, write the name of the group, write the name of the group. The group is called Nigeria. So it's Nigeria group. It's Nigeria group. So it's Nigeria group. So it is Nigeria group. So we have here Nigeria group. Nigeria group. Statement of profit and loss. Statement of profit and loss. So we start right how we are consolidating. Remember, this is consolidated statement of profit or loss at the end of the year. And we stayed with this thing for a whole year. So you're not going to do any time apportionment. You're not going to do any time apportionment. So you start with the pro forma as usual. Always start with the pro forma. That structure, just the structure itself will really end up giving you a lot of marks without knowing what you're doing. So you come and write their revenue. So we have their revenue, right? So we have their operating costs, operating cost. Then we have operating profit, operating profit. I'm just following everything there. I have finance cost. I have finance cost. After that, I have interest receivable. After that, I have profit before tax. You can leave some space just in case something crops up. Profit before tax. Then I have taxation itself, tax, which now will bear what we call profit for the year. And then we have OCI, other comprehensive income. So under other comprehensive income, ladies and gentlemen, what else have they given us there under other comprehensive income? Under other comprehensive income, I have revaluation surplus. So I have revaluation surplus. And I'll be bringing here the group exchange gain. The group exchange gain. Very important. Group exchange gain for me to be able to get what we call the total comprehensive income. The total comprehensive income. These I'll get all the marks really. I'll get all the marks here. So please ensure that you copy down, put down that statement the way I've done mine. See whether you'll be able to write that general structure like that. Tell me once you finish then. Tell me once you finish. Done. Great. Great, great, great. Thank you very much. So we start with revenue. So revenue, what do I do with revenue free marks? Revenue, I'll pick the one of 500,000. So revenue, I'll pick 500,000. So revenue, I'll pick 500,000 plus 300,000. So it's 500,000 plus this 300,000, remember, is in DN. So I need to change this. So how do I exchange this 300,000 to dollars? Which rate should I use? When we started, I gave you the procedure. Which rate should I use, ladies and gentlemen? Which rate should I use, ladies and gentlemen, here? Average rate. Do you remember that? Average rate, average rate, average rate. For income statement, it's always average rate divided by 3, averages divided by 3. Thank you very much. So divide this by 3. Divide this by 3. So divide this by 3. Haya, unajua hii haina mambo. Unajua wa kuongezea mambo mengine ati kulikuwa na internal revenue, hii haina mambo mengi. So hebu nipatie hapa figure. Nipatie figure tuone 500,000 plus 300,000 itakuja ngapi? Pata potea. Pata potea, pata potea. Inakuja 600,000. Inakuja 600,000. 600,000. And then we have, ladies and gentlemen, operating cost. So operating cost, what do I see there? Operating cost, I will take, ladies and gentlemen, 400,000. 400,000 plus operating cost of the parent or of the subsidiary. So operating cost of the subsidiary, wamekupatia hapa. Wamekupatia hapa. Operating cost of the subsidiary, you can see it's 150,000. 150,000 DNs. 150,000 DNs. But remember, there is another operational cost that so many people will forget. There was an additional depreciation. There was an additional depreciation which came because of what your fair value adjustment. That automatically will go to the operations. So these two, they're in DNs. They have to be divided by 3. So please take 400,000 plus 151,000 divided by 3. Give me a figure to write there. Give me a figure to write there. Give me a figure to write there. Time is not on our side. Time is not on our side. Please hurry up. Hurry up. You have 450, 333. So we have here 450, 3333. And if you subtract here, now we shall be able to get our operating profit of 149,667. 149,667. Can you kindly confirm this operating profit? Confirm the operating profit. Confirm the operating profit. 149,667. Yes. So from there we go to the finance cost. So finance cost has been provided. The finance cost has been provided. So finance cost, I can see 1,100 plus nil. Actually, there is nothing really to. No. Finance cost. Yeah, 11. That's interest receivable. So finance cost is 6,100. Finance cost is 6,100 plus 3,300. But you see, this 3,300 has to be changed, has to be translated. So divided by the average rate, which is 3. So could you kindly give me this figure now? Give me this finance cost figure. What do we have there? Somebody, what do we have here? Somebody? 7,200. 7,200, I'm supposed to deduct that. And then we have interest receivable. Interest receivable is the one that we have 1100, of course, plus 0. So there is no translation here. So this gives me 1100. It's an income. So could you kindly give me the profit before taxation? Who can give me the profit here before taxation very fast? Please give me the profit before taxation very fast. For those of you who did this exam last semester and failed, I'm so sure you misinterpreted this question so seriously. You misinterpreted the question of a foreign subsidiary so seriously. 143, 567. 143, 567. And then we have now the tax. The tax, I can see tax there. The tax which I'm able to see here. The tax which I'm able to see here. The tax that I'm able to see here is 20,000 plus 46,700. 20,000, 20,000, 20,000, 20,000 plus 46 divided by 3. Divided by 3. Divided by 3. 46,700 divided by 3. And then please remember body mass. Don't say 20,000 plus 46,700 equals. No, it is only this number which is being divided by 3 plus 20,000. So what figure are we getting here, somebody? 35, 35, 567. 35, 567, 567. So please go ahead and subtract this for you to give us the profit for the year. Profit for the year. Profit for the year. What do we have there? Profit for the year. Profit for the year, 108,000. 108,000. 108,000. From there, come and give us other comprehensive incomes, other comprehensive incomes, other comprehensive incomes, other comprehensive incomes. Please give me the revaluation surplus. The revaluation surplus. The revaluation surplus. How much? The revaluation surplus. Revaluation surplus. How much? Revaluation surplus. Revaluation surplus. Revaluation surplus. Revaluation surplus. I'll pick 10,000. 10,000 alone. 10,000 alone. And of course, you know, ladies and gentlemen, in this case here, the 10,000, why am I not depreciating the way Marietta is telling me? Depreciation already has come here. Depreciation is an operational expense, and this is not an operational revenue. So depreciation has been accounted for here. So I'll just pick, when we had our assets revalued, we debited the asset, credited revaluation. We don't, in this case here, make any adjustments regarding depreciation on our revaluation account. We never do that. So revaluation, this asset which was revalued upwards, 10,000, we simply pick it the way it is, that 10,000. And then now we have the last one, which is the group exchange gain. The group exchange gain, don't share. You take the whole figures before sharing. Before sharing, are you able to give us those group exchange gains? I remember one of them was 4,600 for the net assets. And for the goodwill, the group exchange gain, don't share. For goodwill, 77.5, was it goodwill? I can't remember very well. 77.5, don't share. Here we don't share at all, because sharing normally in the income statement, the sharing goes down there, and I shall never do that in an exam. So 46,500 plus 77,500, how much do we have here, somebody? How much do we have? 124,000. So here we have 124,000. So please come and add there for you to be able to give us the total CI, the total comprehensive income. The total comprehensive income itakuja ikuwe ngapi? Total comprehensive income ukiongeza itakuja ikuwe ngapi jameni? Total comprehensive income itakuja ikuwe ngapi jameni ukiongeza? 242,000. 242,000. That is the end of the thing. Please never try to come and start up. You don't have that time. Attributable to anything, attributable, no. And I showed you even from the marking scheme of 𝐭𝐨𝐝, those things will not earn you even an extra mark. Actually, even this statement here of OCI, nothing. The moment you do this and then know how to adjust for any incomes, internal sales, know how to compute UPS, etc. You'll end up getting so many marks without knowing what you're doing. Now, for the students who attempted this exam last semester, if you have to be very honest with me, were you able to get this question correctly? The one that you did last semester, please be very honest. Were you able to interpret that question nicely? Or you can't remember anything? Please be very honest. Were you able to interpret the question nicely? Disaster. But now I believe, ladies and gentlemen, that if you go to that particular question, you may not be able to get all the marks, but I'm so sure you can't miss. You can't miss more than a half. So now I'm throwing this challenge to you. Before I meet you in my next class, I would expect you guys to have tried the last sitting question. We had one friend in this class called Mr. Guga, who tried that question. If Guga, you don't mind, you can also share. Was busy. So remember, when you're doing this question, it doesn't have to balance. The most important thing, especially when you do the pro forma, like I've never seen this finance cost changing. Finance cost will be okay. Interest receivable will be okay, right? Tax never changes easily. That will be okay. etc. Even this revaluation surplus is easy. Zinakuanga the same. Hizo zinanga maneno. Utapata marks za bure. Ukienda pala kwa share capital kwa marks, so you should have capitalized on those free marks.